All right, thank you for joining us. We are going to be talking about the kind of cryptocurrencies that are not supposed to go to the moon. They're supposed to just sit there and stay still. That's stablecoins. My name is Mark Hochstein. I am the managing editor at CoinDesk. I've been with CoinDesk for nearly 2 years. Previously, I worked at American Banker, which is a trade publication. I think this is going to be a fascinating conversation. I'm going to ask each of Well, actually, before I ask the panelists to introduce themselves, just to sort of level set, we are going to be talking about the emerging use case, primarily about the emerging use cases for stablecoins, because I think most people here know. Does anyone here not know what a stablecoin is? If you don't, look it up. But as most people here probably know, the primary use case in action to date for stablecoins has been essentially to move money between crypto exchanges. And it certainly served that purpose. But the focus of this conversation is going to be what's next for this type of instrument. But first, each panelist, please introduce yourself and explain how you're involved in stablecoins. Starting with Christine.
Thanks, Mark. Hey, everybody. I'm Christine. I run the blockchain program at JP Morgan. JP Morgan is a bank. It's one of the top 3 US dollar clearing banks in the world, clearing $6 trillion a day for 80% of the Fortune 500 and 1.6 million small businesses. The reason why I'm here is because we recently announced JP Morgan Coin, which definitely isn't as exciting as it sounds. It's basically money that's in your JP Morgan bank account represented on a permissioned blockchain, which I know some of the people here don't even think should exist. But that's why I'm here.
Sarah.
Hi, I'm Sarah Olson. I'm a managing director at Gemini Trust Company. Gemini is an exchange and custodian founded by Cameron and Tyler Winklevoss in 2014. We're regulated by the New York State Department of Financial Services, and we recently launched a stablecoin last year, which is using the standard ERC20 protocol. We believe in terms of open source stablecoins, meaning that not on a permission-based blockchain, that we are the most institutional stablecoin as well as the most transparent.
Joe.
So my name is, can you guys hear me? My name is Joao. I'm with Circle. I'm a proud lead for US dollar coin. So Circle, as you know, is a crypto finance company, and we launched US dollar coin. We brought to market with Coinbase as part of a joint venture that both Circle and Coinbase founded late last year. USDC is a fiat token, fully collateralized, similar to some of the other models that we're going to talk about here. The main difference being this joint venture, this network that we founded alongside Coinbase. Circle and Coinbase, you can clearly imagine, are 2 very competitive companies. They compete in a lot of spaces, but when it comes to stablecoin or a fiat token, we think that standards are really important, moreover than technical standards, all the governance standards and anything that comes with it. So Center is the entity that defines standards, both on the technology side and on the governance side, and then issuers such as Circle and Coinbase can issue a fungible token, and the idea is that network can expand and be very resilient because of that.
So let's start by just sort of attacking the central question here head on. So what are the future or potential use cases for stablecoins beyond just arbitraging different cryptos, and more and importantly, for that use case, why do you need a blockchain token and a blockchain for that? Starting with JPM Coin.
Sure. Usually I like to tell the story of how JP Morgan Coin was created in this instance. Actually, last year at CoinDesk Consensus, we demoed a debt issuance platform that we had built, and we had ended up testing it with clients like National Bank of Canada, Goldman Sachs Asset Management, Western Asset, and Pfizer Treasury. And basically, it was an end-to-end financial instrument lifecycle platform. So the issuance, the syndication, the automated DVP settlement of the primary issuance and secondary trade settlements, automated calculation of interest payments, and a maturity paydown of this type of debt instrument. And
on a blockchain.
On a blockchain, smart contracts, et cetera, on Quorum, which is, for those of you who don't know yet, is the fork of public Ethereum with privacy that JP Morgan open sourced a couple years ago. There's a quorum booth downstairs if you'd like to learn more. And so in that process of modeling out the end-to-end of a financial instrument, and let's keep in mind, let's remember what are the goals of enterprise blockchain. Not the same as public blockchain. Public blockchain goals are decentralization, censorship resistance, peer-to-peer value transfer system. In enterprise blockchain, the goals are just reducing reconciliation, operational streamlining, technological simplification, all this boring stuff, right? And so we were really trying to see whether or not we could use blockchain to basically streamline operations for the whole debt lifecycle. And so when we modeled everything out, essentially what we got to was, okay, well, this makes sense. We can totally just issue this debt instrument on a blockchain because debt instruments get created all the time. But how do you get, like, what do we do on the cash leg, right? And so the first level of thinking is like, okay, so maybe we should, maybe send like a payments instruction from the blockchain to our legacy payment system, and then maybe we'll send a wire from one counterparty to the other, receive the wire, confirm it, and then send a message back to the blockchain and say like, okay, we got this. That totally is besides the point. There's no operational streamlining there at all. It's like, forget a blockchain, like, don't bother, right? And actually, in some of our research of some of the potential use cases for blockchain, a lot of the inefficiencies were around, hey, I just received a wire. I don't know what this is for. Like, what is this payment? Is this the right payment? Like, why do I have this? Like, and reconciling, to find like the source of why you received something, or whether or not you actually received something. So it didn't make sense to divorce the financial instrument from the payments leg. And so then the next level of thinking is like, okay, well, how do I on-ramp fiat onto a blockchain? Because we're not going to use crypto. I mean, you know who our CEO is, et cetera, right? So like, how do we onboard fiat onto blockchain? How do we represent money that's just sitting in your JP Morgan account onto blockchain so that we can have frictionless settlement for the primary issuance or secondary trade? How do we really take advantage of the full potential of smart contracts, automating the calculation of interest payments and having them pay out? And that's where the cash token was born. Basically, I don't know, I was just calling it fiat on permission blockchain for like the longest time. And actually—
it's not as catchy as JPM
yeah,
coin.
Definitely not as catchy as stablecoin. Should have called it a stablecoin first. Definitely not as catchy as JP Morgan coin. And actually, what's really funny is that this time last year at CoinDesk Consensus, I demoed this debt issuance platform in front of like a lot of you guys, and there was even this like whole segment about tokenizing cash, and no one noticed it at all. Like no one was paying attention, or like no one cared, or it wasn't called the right name, or whatever. And so for us, we really think that this cash token is the foundation for enabling other enterprise blockchain applications. The debt issuance one is one example. But as those in the enterprise space know, we've been researching enterprise blockchain for about 4 years now. Many different use cases ranging from supply chain tracking and supply chain finance to the financial markets, tokenization of both equity and debt, et cetera. And all of them need a payments leg. And I think that from like a tech innovation standpoint, you always need the payments leg as the foundation that really enables the rest of the ecosystem. Kind of like how you needed PayPal to really have eBay as a marketplace flourish, kind of how you needed Square to have mobile commerce flourish. We're kind of hoping JP Morgan coin is going to be the catalyst to have enterprise blockchain applications flourish.
So it's in a way, it's a Trojan horse for all this enterprise stuff we've been talking about for the last few years to finally take off.
Well, I don't want to like overinflate expectations. Like, I mean, we think of it as a foundational piece. If making regular way fiat payments are easier on blockchain, certainly there are many other applications that can be enabled, and specifically blockchain-enabled applications, right? And I think this is a really important point. I think that enterprise blockchain, we're still kind of in the phase, although we're getting out of it, we're kind of still in the phase of like lifting and dropping existing financial instruments on blockchain and saying like, oh, hey, here's a debt instrument on blockchain, right? Like, or here's like an equity instrument on blockchain, or here's payments on blockchain. But what I'm really hoping for is the next generation of blockchain applications that are uniquely, I mean, this was like the core question, uniquely blockchain-based. And what are those applications? I think you can see a lot of the inspiration and the innovation that we see in the public blockchain space, right? Some of like the interesting intraday collateralized lending that we're seeing, data prediction marketplaces. I mean, those are all really exciting in the public blockchain space for this group and this audience here. But let's imagine the possibilities if we're able to scale that technology for enterprises at large around the world. Like what kind of applications could like a corporate or an asset manager use around like a data marketplace or around like intraday lending, like where you have collateral tokens and cash tokens exchanged like midday even, right? So I think that's really fascinating. I think we're just entering that phase in enterprise blockchain right now, so stay tuned. But don't get your overinflated expectations because enterprise blockchain already has that.
Yes, we all know. So sort of building off that point, Sarah, so what are, at Gemini, what are the applications that you're envisioning beyond exchange, beyond trading, beyond the way it's been used for the Gemini dollar?
It's funny because I'm going to talk about a few use cases, and they're going to sound very different than what Christine's talking about, but they're really not. This is really a way to streamline exchanging a particular value. We talk, in this case, we're talking about $1, and Christine uses the example of a debt instrument on the permission-based blockchain. We see a lot of applications within for digital dollar in general, and whether that be in financial instruments such as debt or insurance policies or other. We're seeing a lot of crypto native ways of using a digital dollar. I think what's most interesting and exciting to us right now, and in the long term too, is the payments element. This morning we made a very big announcement that we're partnering with Flexa, who made their big debut today, and that. Thanks, Christine. And that enables everyday users to spend their cryptocurrency in large merchants such as Whole Foods or Regal Cinema, and it's a way of being able to use value that you can acquire in this decentralized way and bring it to the real world for everyday use. One of the big problems though with spending Bitcoin is people don't want to spend Bitcoin. A lot of people don't believe that Bitcoin is even really meant for spending. So the Gemini dollar was a very, very good instrument for that. We've created this digital dollar. It's issued by Gemini Trust. We custody all the dollars collateralizing the Gemini dollar with our partner banks at State Street and Goldman Sachs Asset Management. So we've created this really interesting, very legitimate dollar instrument to be able to use in payment. And it's not that, and what's really interesting about the Flexa product is it's not using cryptocurrency for the catch of using crypto. What it enables to do is to essentially create cost-free payments that are irreversible. So merchants that are typically, that can be spending billions of dollars a year in payment processing costs and dealing with fraud now have a solution for that. So it's incredibly profound in terms of the ability to spend everyday goods with the Gemini dollar.
Now, actually, that's interesting. You mentioned the irreversibility, because I do remember that going way back, like 4 or 5 years ago, one of the selling points for merchants of Bitcoin was there's no chargebacks. Mm-hmm. So that there's, and I guess that was offset. That appeal was offset by the volatility and whatnot. But it sounds like there's still a need out there. That you're looking to fill in that sense.
Yeah, very much so. I mean, it's funny that our CEO is named Tyler and Flex's CEO is named Tyler, and somebody from the Flexa team was saying our Tyler versus your Tyler, and I was like, I feel like they're both our Tylers at this point. But Tyler Spalding was speaking this morning and talking about the platform, and has explained that there's a lot of things that Bitcoin and the blockchain don't do well, and it has a lot of issues still currently around latency and things like that. But one of the things that's really incredible about it is it was in a way designed for payments, and so because those can't be reversed. It's a way of creating verified transactions that have zero fraud risk, which has never been seen before. Flexa, though, is the intermediary between the user spending their Bitcoin and the merchant receiving the Bitcoin, because merchants don't want to wait 10 minutes and be looking on the blockchain for confirmations. So having this second layer to make it usable, so you don't even feel like you're using crypto with getting the benefits of it, are really profound. And I think we're going to start to see more solutions like that, given the fact that we have these digital dollars.
And just to clarify, the Gemini dollar is sort of in the middle of the spend solution?
So Spend supports several digital assets, Bitcoin, Bitcoin Cash, Ether, and the Gemini dollar. The Gemini dollar is something that it's the best spendable asset, of those, because most are looking at the other assets for different types of utility or investment. The Gemini dollar is not an investment; it is a way of, sending dollars via the blockchain.
And at the USDC, how are they thinking about stablecoins beyond just supporting the exchange business?
Yeah, it's not too dissimilar to what they mentioned. Perhaps we just articulated another way. For us, you have to look at it from two perspectives. One is the user perspective, the end consumer perspective, right? There's a number of very good reasons for people to be interested in financial products that are dollarized, right? So the US dollar is the reserve currency of the world. There are many economies around the world where people would be very interested in having access to some sort of dollar-based savings account, dollar-based investment product, particularly if they are internet-based and they can have access to it with a mobile phone instead of having to go through a more engaged process with a local banking provider or something like that. So there's the consumer side of driving use cases for fiat tokens such as USDC, but then on the broader side, you have to look at it as programmable money, right? And then we have to tie it back to the crypto exchange use cases. The reason why fiat tokens and stablecoins are so popular in the crypto exchange use case, and that is because they become this programmable money that all these entities, all these crypto exchanges are very familiar with, picking them off the shelf and programming on top of them and integrating with their infrastructures. It's a lot more complicated and a lot less standard to do that with bank accounts and banking systems and payments processing solutions around the world, particularly if these solutions want to be global, right? You want to store value and you want to process transactions in the US, you're going to do that with a few selected entities. If you want to do that in Europe, then it's a whole lot of different entities, and in Asia, and so on and so forth. You want to keep expanding as a provider, in this case a crypto exchange. It would be very hard to do that with fiat. So stablecoins are very good for that. But then if you go beyond the crypto exchanges, it's similar. So if I as an entrepreneur, if I'm as a group of engineers, if we want to build a solution that has to do with, again, storing money, transacting, settling, reconciling, it's tremendously hard to do that with typical fiat money. You have to partner with the bank. You have to integrate with their partner clunky systems, right? Or maybe you're going to use Stripe, or maybe you're going to use something like that. But again, you're going to be siloed by non-standard, non-global, non-open solutions. Fiat tokens are a very, very interesting alternative to that. All of a sudden, all that I need is a wallet and the ability to write code against these APIs. And that's how you see emerging solutions that I think are very different from the kind of financial products and services that we have today. People who are researching how fiat tokens can be integrated into invoice financing, for example, and have invoices that are all of a sudden, just nothing more than a non-fungible token, and you deposit an invoice to a smart contract, and you get a disbursement of stablecoin on the other side. So all these use cases, I think, are going to be tremendously exciting because of the aspect of programmable money that fiat tokens bring to the table.
So in a couple minutes, we'll have a mic on the floor if anyone in the audience has questions. But one thing I did want to ask about before we go there. So we're talking about three stable coins, two of which are running on public networks, one of which is running on a permission network. Is there any possibility that these two worlds, there could be like sort of a bridge between these two worlds, and how would that work, and what would the implications be for that?
Yeah, I mean, I think this is a really interesting question. Aside from even our project, there are exciting other projects like Utility Settlement Coin, led by Santander, UBS, and Barclays, focusing on trying to make central bank level money on Clearmatics, which is an Ethereum variant. Then there's also the work that the Monetary Authority of Singapore has been doing, which we've been partnering with in their project Ubin, the multiple phases of decentralizing their RTGS system. And that also on Ethereum variant on Quorum. JP Morgan coin as commercial bank money on permissioned Ethereum on Quorum. And then Gemini dollar and USDC on public Ethereum mainnet. And so I think it's really interesting to kind of think about as commercial bank money. So I think it'll be really interesting to see how this plays out, where you have central bank level money, maybe even central bank issued money, commercial bank money on permission chains, commercial bank money on public chains, and how those chains can interact. I think it helps that they're all like Ethereum variants for now. As an example, as part of the Monetary Authority of Singapore project that we did that just recently published a report, we actually did a cross-blockchain, cross-asset, cross-border, cross-currency swap, like so asset transfer from Monetary Authority of Singapore with Central Bank of Canada across 2 different blockchains, Quorum and R3's Corda. But I think like using hash time locked smart contracts. But I think that technology has been proven now, and so you can kind of imagine how in this ecosystem at large there could be like some switching in and out between central bank money, permissioned commercial bank money, public blockchain money, for whatever the particular use cases are. Like we could all like string together as a financial system. And this isn't, I think this is like kind of analogous to how the current banking system sort of works today, where you have central banks, commercial banks. Like, we at JP Morgan, we consider ourselves like a banker's bank, banking an enormous number of community and regional banks that really focus on their, local region. And so, at some point you can kind of think of like, Gemini as an example, sort of being the bank that focuses on their, crypto ecosystem, and, us kind of having like banking them as an example, like in a broader ecosystem at large.
Yes.
If I can add to that, I totally agree. I think we've seen over the last number of years a fragmentation in terms of public blockchains, right? And actually right now we're seeing more and more projects finally coming live, and some of them specialize, whether it is in terms of use cases or whether it is in terms of geos. Some blockchains are becoming really popular in Asia versus some other ones. We think there's a space for these fiat tokens, being represented across all those chains and being specialized for those use cases or geos. But that's why things like standards and networks, they're really important, because I don't think people will be interested in utilizing, this fiat token in this circumstance and this other fiat token in this other circumstance. Eventually, they will kind of converge again to a couple of main ones. But I think the next trend is probably seeing these fiat tokens being utilized across different chains.
I think it's important, though, to remember that this isn't just about reducing friction for financial institutions like Gemini or Circle or JP Morgan. This is also about accessibility, and one of the things that I love about what I do, and I love about Gemini's mission, and it's one of the reasons I respect JP Morgan immensely, but do not want to be working there, is because we're working on these open source solutions that provide accessibility to everyone. No. Christine's been a friend.
Hold on a second. Quorum is open source.
Yes.
FYI, go find the GitHub. It's open source. Look it up.
Christine's been a friend of mine now for 2 years, and a big reason why I wanted to be on this panel. But one of the things that I really love about this is accessibility to value, and what stablecoins allow is anyone in the world to be able to access the value right now of the US dollar, that you don't necessarily need a bank account or a passport or even a birth certificate to be able to do that. And I think the intersections between the sort of decentralized world and the centralized world are going to be important, because they're going to make all of this type of stuff possible, to be able to take your stablecoin and go buy a cup of coffee. But I think what's really profound and sometimes lost in discussion is what we're doing is we're democratizing finance and providing accessibility for those who wouldn't otherwise be able to participate in an economy, and bringing them in. And that's why I think that although all of these systems and ecosystems are important, that should be our ultimate goal as we work together.
Yeah, and just to add on that, that's cool. I like my job. I'll stay here too anyway. But like in terms of like, I mean, the way that I think about it is that we're doing our part, right? Like you're doing your part to democratize access broadly, and we're doing our part to democratize access to enterprise, right? We've got thousands of wholesale banks, millions of small business clients. Like if we get this right, they're going to get comfortable with using blockchain, an enterprise Ethereum variant of blockchain, which I think is quite exciting. Like in terms of like global scale and reach. So I think we're all playing our parts, just different parts, but that's why we're all kind of ecosystem together.
Very much so.
Question from the audience. The gentleman here. Bring the mic down. Sir.
Thank you. I think the estimate of annual revenues from payments globally today is $2 to $3 trillion. What do products like yours, be they public or permissioned, mean for businesses today that exist primarily to charge a fee for payments?
Great question.
Oh, wow.
Sarah?
Yeah, I mean, I think that this is going to entirely change the legacy system. I think, again, this is probably a better question for the Flexa team and that have a large booth and a strong team that can speak to this. But, merchants are charging between 2 to 3%, and then, having to account for things like chargeback risks, it's really, which the merchants themselves are bearing, it's absurdly expensive. And so being able to provide a cost-free system that completely sidesteps the legacy system is revolutionary. I mean, that's going to completely change how we transact value.
There's another question in the balcony up here. Right over there, that gentleman.
Thank you. I read in one of the many, many internet gossip columns that there is a backdoor kill switch for the stablecoins out of certain vendors. Does that exist in the Gemini or the Circle products? In other words, let's suppose there is a order by FinCEN, SEC, OCC, etc. Can users' coins be frozen by the vendors such as Circle or Gemini?
Do you want to take that first?
Yeah, so I wouldn't call it a backdoor. I think that's a
Or front door, side door. If they can do it, they can do
Any
it.
door.
So.
Some sort of door.
If someone gets in my house, they're in.
right.
A control tower, as it were.
Right. There is a mechanism that we call a blacklisting mechanism, and it's a mechanism that in our own setup. So as I mentioned, there's a joint venture, there's a consortium called Center, and then there are the individual issuers such as Circle and Coinbase. Circle and Coinbase as issuers, they get access to some of the functionalities in the USDC smart contracts, such as basically minting and burning new coins. Blacklisting is something that obviously, as we work in conjunction with regulators, particularly in the US, to bring this product to market, if we are in the various dealings that we have with regulators and law enforcement in the jurisdictions that both Circle and Coinbase operate in, if we are told by a court order by a law enforcer that we need to freeze assets and we have the ability to do so, then we have to oblige. So we would then liaise with Center as a network, and Center has the access to do that. So it's a blacklisting mechanism. Basically, what you can do is you can say, this address, it has been in connection with some sort of illegal activity. There's a court order. There's a law enforcement act. You have to abide to it, and then if there are any funds on that wallet, it gets frozen. Otherwise, that wallet just becomes unable to move to send and receive funds, basically.
That leads into the topic of inclusion, though. So if I'm a 14-year-old boy in Sri Lanka, and for whatever reason, let's assume none that are germane to ethics or even law, I ended up on said blacklist, then it's not truly financially inclusive.
Well,
just like you're frozen.
I should say, too, that the Gemini dollar smart contract is not designed the same way that USDC is. I mean, that there's not like a reversibility mechanism to the code. And so for the Gemini dollar to be able to reverse transactions, you would essentially have to hard fork the asset, and that's that way by design.
You can't reverse transactions on USDC either.
Okay, that's the problem.
Okay.
I think we have time for one more question. This gentleman in the front.
Thank you. I heard that JP Morgan says that their coin is about, let's say, enterprise-grade wholesale banking, while it gives me the impression that in this side of the table, it was not kind of their business. So I was wondering, if stable coins have enough liquidity at some point in time that could be used by anyone, right? It doesn't matter if it is in a public blockchain or in a private permissioned. So are you guys in the more coming from the public blockchain space eager to, let's say, jump into and get the ambitions to tap in the wholesale banking business, such as what JP Morgan is doing in a private permissioned way?
We're more use case agnostic and more into bringing something for the ecosystem that is akin to an open standard, and so that anybody can download a piece of software just as they do with a lot of stuff on the internet, and build on top of that. Whether the use case is payments or or something more banking related, maybe settlement, maybe something that integrates with a private blockchain because there's some supply chain use case that requires the settlement and payment aspect of it. We're really agnostic to that, and we work a lot with the ecosystem so that is in place. We are very proud of how liquid USDC is right now. Again, that comes a lot from the crypto exchange use case, but for like basically pick any metric you want, USDC is the second largest stable coin at this point. We have redeemed well over $400 million in assets at this point, and redemption is a critical path for liquidity. We're also present in the top quality exchanges, and that is sort of the first step for that particular use case. Yes, but as you start seeing the use cases moving beyond crypto exchange into payments and lending and DeFi and all these other things, the crypto exchange marketplaces become very relevant for people to obtain liquidity, because you will have a period in time where people need to move from fiat to these new representation on the internet and back, and so you will need those marketplaces to achieve that.
Yeah, and I think it's important to remember too that although we're platforms that support open source protocols and applications, our platforms themselves are not decentralized, and so there's always that element of centralization and an institutional approach that we need to take to the market, and our businesses depend heavily off of banking infrastructure, and so if banks like JP Morgan and others are using the enterprise blockchain to improve their offerings, that only helps us. So there is that sort of working together, and we're already doing that in some ways with our banking partners. This just makes it easier.
And this is a fascinating conversation, but I'm afraid we have to wrap it up. We're out of time. But I want to thank Sarah, Christine, and Joe. This is a fascinating conversation, and thank you all for the great questions.